Hey everyone, welcome back to Corporate Decoder, the place where we break down the financial secrets of the corporate world. And today we're diving into Chart Industries' latest annual report, which reads more like a merger and acquisition saga than just a financial update. This report covers the year ending the 31st of December 2025, and it is packed with big numbers and even bigger business moves. So buckle up as we decode Chart Industries' financial story. Let's start with the big picture. Chart Industries is a global leader in designing and making equipment for handling gases and liquids. Think of them as the engineers behind the scenes for clean energy sources like hydrogen and LNG. They've got a massive global footprint with 62 manufacturing plants and over 50 service centers. They serve over 10,000 customers, with their top 10 customers accounting for about 27% of their sales in 2025. That is a pretty significant chunk, so keeping those big clients happy is key. Now for the financials in 2025, Chart Industries brought in $4.26 billion in sales, a small increase from $4.16 billion in 2024. While sales are up slightly, the profit picture is more complex. Their gross profit edged up to $1.44 billion, leading to a gross profit margin of 33.7%. A slight bump from 33.4% in 2024. This margin improvement is credited to better performance in their cryotank solutions and heat transfer system segments. But here is where things get really interesting. They recorded a massive $266 million termination fee expense in 2025. This stems from the breakup of their merger deal with Flowserve Corporation earlier in the year. This single fee significantly impacted their operating income, which dropped to $358.4 million in 2025, down from $647.5 million in 2024. This fee alone is over 6% of their total sales for the year, a significant hit, and the drama continues. Chart is also in the process of being acquired by Baker Hughes. This merger, announced in July 2025, was approved by Chart's shareholders in October. While regulatory reviews are still ongoing, they expect the deal to close in the second quarter of 2026. This means a lot of uncertainty and transaction costs, which are already showing up in their books. Let's drill down into the segments. The Repair Service Diamond CAMP leasing segment saw a sales decrease of about $69 million in 2025, largely because 2024 had record-breaking field service work and a big equipment sale that did not repeat. This segment's operating income also took a hit, dropping by $81 million. The Specialty Products segment experienced a sales decrease of about $16 million. This was due to lower sales in areas like hydrogen and LNG for vehicles, partly offset by growth in mining, space, and water treatment. Operating income here also declined due to lower gross profit and higher selling. General and administrative expenses. On a brighter note, the heat transfer system segment showed strong growth, with sales jumping by over $200 million thanks to strong performance in LNG projects and data centers. This segment's operating income improved significantly, more than 50%, leading to a much healthier operating margin. The cryotank solutions segment saw a modest sales decrease, primarily due to lower industrial gas sales in the US, though Europe and China showed improvement. The main drag here was higher administrative costs. Looking ahead, their total backlog stands at a very healthy $5.89 billion as of the 31st of December 2025, up from $4.85 billion in 2024. This is fantastic news, especially in their specialty products and repair service dummy-savvy team. Leasing segments, which saw significant order increases, heat transfer systems also maintained strong orders. While cryotank solutions saw a slight increase, this robust backlog suggests good future revenue potential, provided they can execute. Now let's talk about their debt situation. As of the 31st of December 2025, Chart Industries had substantial debt totaling around $3.6 billion. This is a lot of money, and it means a significant portion of their operating income goes towards servicing this debt. Interest expense alone was over $300 million in 2025. While this is down from 2024, it is still a major financial commitment that limits their flexibility, especially with the merger and acquisition activities. A massive part of their balance sheet, about $3 billion, is goodwill. This is the excess amount paid over the fair value of net assets acquired in business combinations, mainly from the Howden acquisition. This goodwill is tested annually for impairment, and a significant write-down could severely impact their earnings. The report also highlights significant risks. The proposed merger with Baker Hughes itself is a major risk factor. Closing the deal is dependent on various government approvals, and there is no guarantee these will be obtained without burdensome conditions, or at all. The uncertainty surrounding the merger also impacts their business relationships and employee retention. They also point out the risk of failing to successfully integrate acquisitions. Like Howden, if the anticipated cost savings and commercial synergies don't materialize, it could hurt their bottom line. This is a classic risk for companies that grow through acquisition. Protecting their intellectual property is another key concern. While they rely on a mix of patents and proprietary knowledge, the risk of third parties infringing on their rights, especially in foreign markets, is always present. The cost and effort to defend this intellectual property could be substantial. Changes in US trade policy, tariffs, and import to export. Regulations are also highlighted as a risk. Given their global operations, trade disputes and retaliatory actions could significantly impact their sales and profitability. Now, let's look at what their auditors Deloitte 40 Amp Touch had to say. They gave Chart Industries a clean opinion on the financial statements, meaning they believe the financials are presented fairly. They also reported that Chart maintained effective internal control over financial reporting as of the 31st of December 2025. This is a crucial sign of financial health and reliability. However, there is a critical audit matter flagged concerning revenue recognition for highly customized long-term contracts. The auditors focused on management's estimates of total cost to complete these projects, which involves significant judgment, basically. Accurately predicting the final cost of these complex projects is challenging, and any miscalculation could affect reported revenue. So, what is the verdict on Chart Industries? They are undoubtedly a leader in critical clean energy infrastructure. Their strategy of acquiring complementary businesses like Howden has positioned them for growth in exciting markets like hydrogen and LNG. The strong backlog is a significant positive, pointing to future demand for their products and services. However, the significant debt load inherited from acquisitions and expansion is a major concern. The termination fee from the Flowserve deal and the ongoing Baker Hughes merger introduce considerable uncertainty and financial pressure. While their auditors are confident in their financial controls, the reliance on estimates for long-term contracts and the sheer amount of goodwill on their books are areas to watch closely. The company's direction is clearly tied to the global energy transition, which is a massive opportunity, but also a volatile landscape influenced by geopolitical and economic factors. In conclusion, Chart Industries is playing a vital role in a growing industry, but they are navigating a complex financial and operational environment. The success of the Baker Hughes merger and their ability to manage their debt will be critical in determining their future performance. What is your take on Chart Industries' financial report and their strategic moves? Let us know your thoughts in the comments below. If you found this deep dive valuable, please hit that like button and subscribe for more corporate breakdowns. And don't forget to join our Discord community, linked in the description, for even more exclusive insights. Thanks for watching, and we'll see you in the next one.